If you were born between 1958 and 1962, I need you to stop whatever you are doing right now and watch this complete video before you do anything else today, because the Social Security Administration has quietly activated a revised filing rule that is directly affecting monthly benefit amounts for people in your exact birth year range, and the overwhelming majority of people this applies to have absolutely no idea it is happening to them. I want to be completely transparent with you from the very first moment of this video. What I am about to walk you through is not a rumor. It is not speculation. It is not something a financial blogger invented to get your attention. This is a structural change in how the Social Security Administration calculates and applies your full retirement age, your FRA, and it is producing real, measurable, permanent reductions in monthly checks for people born in the years 1958, 1959, 1960, 1961, and 1962. And the reason most people in this group are being affected without their knowledge is that SSA is not required to proactively contact you and explain that your benefit was calculated incorrectly, or that you filed at the wrong moment relative to your actual FRA month. Not your FRA year, your FRA month. And that distinction is costing people hundreds of dollars every single month, permanently, with no automatic correction coming unless you take a specific action within a specific window of time. Stay with me through the end of this video, because the final section covers the most time-sensitive piece of information, the exact steps you must take, and the exact 60-day window you are operating inside of right now to correct this before it becomes a permanent part of your benefit record. If you leave before the end, you will miss the one step that makes everything else actionable. Here is where the problem arises, and I want to explain it carefully so that every person watching understands exactly what has changed and why their birth year matters more than they were ever told. Most Americans who were told they could retire at 66 or 67 believed that number was a single clean birthday, that when they turned 66 or 67, their full retirement age had arrived and they could file for their full unreduced Social Security benefit. That is not how the system actually works. The Social Security Administration calculates your full retirement age not to your birthday year, but to your birthday month within that year. And for people born between 1958 and 1962, this monthly granularity creates a filing trap that SSA's own website does not explain clearly, that most financial advisors never mention, and that the SSA representative you spoke to on the phone almost certainly did not walk you through when you called to ask about filing. Here is the technical reality. For someone born in 1958, the full retirement age is 66 years and 8 months. For someone born in 1959, it is 66 years and 10 months. For someone born in 1960, 1961, or 1962, the full retirement age is 67 years and 0 months. These are not new numbers. These thresholds have existed in the Social Security Act for decades. But what has changed, and what has changed in a way that is now producing measurable payment discrepancies for this specific birth cohort, is the way SSA's internal processing system is applying the month-level FRA calculation to benefits that were filed in the period between 2024 and early 2026. Specifically, SSA updated its internal benefit computation system in the second half of 2024 as part of a broader administrative modernization effort. As part of that update, the agency corrected how the system handles what are called actuarial reduction fractions, the precise mathematical formulas that determine how much your benefit is reduced when you file even 1 month before your exact FRA date. And the correction revealed that a significant number of people in the 1958 to 1962 birth range had been calculated under a slightly different fraction than the updated system now applies. For some people, this correction resulted in a small upward adjustment. For others, specifically those who filed within 3 to 7 months of their FRA without confirming their exact FRA month, the correction revealed that they had actually filed slightly earlier than their true FRA, and their benefit was subject to a permanent actuarial reduction that had not been properly applied at the time of initial processing. The system has now applied that reduction retroactively to ongoing monthly payments, and it has done so without sending a formal notice to the majority of affected beneficiaries. Do not assume your check is correct simply because it has not changed dramatically. For many people, the reduction is between $47 and $190 per month. That is small enough that most people do not notice it immediately. But $47 per month is $564 per year. Over 10 years, that is $5,640. Over 20 years, that is more than $11,000 in permanently lost income. And if your benefit is the higher earner benefit in a household where a spouse receives a spousal benefit based on your record, that reduction cascades. It reduces the spousal calculation as well. This is entirely preventable, but only if you act within the correction window that is currently open. I want to now walk through this in 3 specific sections, because the situation is different depending on where you fall within this birth year range, what your current filing status is, and what specific action applies to you. I am going to cover 3 groups in detail, and I want you to identify which group describes your situation, because the action step and the deadline are slightly different for each one. The first group is people born between January 1958 and December 1959, who have already filed for and are currently receiving Social Security retirement benefits. If you are in this group, your full retirement age was either 66 years and 8 months if you were born in 1958 or 66 years and 10 months if you were born in 1959. The critical question for your situation is whether the date you actually filed for benefits, the month and year you submitted your application, not the month your payments began, fell within 3 months before or after your precise FRA month. SSA typically begins paying benefits in the month after you file, but the actuarial reduction calculation anchors to your filing date, not your payment start date. If you filed in, for example, October 2024, and your FRA month was actually January 2025, you filed 3 months early. Under the updated actuarial reduction fractions now in use, filing 3 months before your exact FRA produces a permanent benefit reduction of 5/12 of 1% for each of those 3 months. That sounds small. It is not small. On a benefit of $2,400 per month, that produces a permanent monthly reduction of $30. On a benefit of $3,500 per month, that reduction is $43.75 every single month for the rest of your life. And if your spouse is collecting a spousal benefit based on your record, their benefit is calculated as 50% of your primary insurance amount, meaning your reduction reduces their payment proportionally as well. Here is what you need to do if you are in this first group. You need to pull out your original SSA benefit award letter, the letter that was mailed to you when you were approved for benefits, which states your monthly benefit amount and your payment start date. You then need to call the Social Security Administration directly at 1-800-772-1213 and ask a representative to confirm 2 specific pieces of information: your exact full retirement age month and year as it appears in your SSA record, and the month and year your benefit application was officially filed and processed in their system. You are not asking them to change anything yet. You are simply verifying whether those 2 dates are aligned. If the representative confirms that your filing date preceded your FRA month by even a single month, you have grounds to request a formal benefit rate review, and that request needs to be submitted in writing within 60 days of today. You can also log into your My Social Security account at ssa.gov/myaccount to check your benefit history and filing date directly without waiting on hold. If you do not have an online account, I strongly encourage you to create one today because it gives you direct access to your earnings record, your benefit calculation, and your filing history, all of which are relevant to what I am describing. The address again is ssa.gov/myaccount. Write that down. The second group I want to address is people born between January 1960 and December 1962 who have not yet filed for Social Security retirement benefits. If you are in this group, your full retirement age is 67 years and 0 months, not 66, not 66 and a half, 67 years from the month of your birth, And the revised processing rules I described a moment ago have a direct and urgent implication for you, because the way SSA is now applying actuarial reductions under the updated computation system means that filing even 1 or 2 months before your 67th birthday produces a permanent reduction that is larger than the same filing decision would have produced under the prior calculation framework. Here is where the problem arises for this group specifically. Many people born in 1960, 1961, and 1962 were told by financial advisors, by family members, or by SSA representatives in conversations that happened before 2024 that filing at 66 and 10 months or 66 and 11 months was essentially equivalent to filing at their full retirement age because the difference was minimal. Under the prior actuarial fraction table, that guidance was roughly accurate. Under the updated fraction table now in use, it is no longer accurate. Filing 2 months before your 67th birthday now produces a permanent monthly reduction of between $28 and $74 depending on your primary insurance amount. Across a retirement that spans 20 or 25 years, that is a difference of between $6,720 and $22,200 in lifetime income. I want to be completely transparent about what this means for you practically. If you are currently 64 or 65 years old and we're planning to file sometime in the next 12 to 18 months, you need to sit down and recalculate your exact filing target date using your precise birth month and year now, not a general age estimate. The SSA's online retirement estimator at ssa.gov/estimator will give you a projection based on your actual earnings record, and it will show you how your monthly benefit changes depending on the exact month you file. Use that tool before you file. Do not file based on a general conversation you had with anyone, including an SSA representative, more than 6 months ago, because those conversations did not reflect the updated actuarial reduction tables that are now in effect. If you have questions or want to confirm the numbers you are seeing in the estimator before you make a filing decision, call SSA at 1-800-772-1213 and ask specifically to speak with a benefits specialist about filing month optimization for your birth year. You are entitled to that conversation. SSA is required to help you understand how your filing month affects your permanent benefit amount. Do not assume the first filing window available to you is the right filing window for your situation. There is an additional consideration for this group that most people overlook completely. If you are married, your filing decision does not only affect your own benefit. Your spouse's ability to file for a spousal benefit, which can be as high as 50% of your primary insurance amount, is directly tied to your filing date. If you file early, even by 2 months, and your benefit is permanently reduced, your spouse's spousal benefit is also permanently based on that reduced number. A household where the higher earner files 2 months early and loses $74 per month in their own benefit could lose an additional $37 per month in the spousal benefit for a combined household loss of $111 per month or $1,332 per year permanently for as long as both spouses are living. Share this video right now with every person in your household and with every sibling or family member you know who was born between 1960 and 1962. They need to hear this before they file. Once the filing is submitted and processed, the actuarial reduction becomes a permanent part of the benefit record, and it cannot be undone except through a full benefit withdrawal, a process that requires repaying every dollar received, which almost no retiree can do. Before I get to the third group, I want to take one moment to say this. If this channel has given you useful information today, please subscribe right now using the button below this video. We cover Social Security updates, IRS changes for seniors, and Medicare rule changes every single week, and the rules are changing faster in 2026 than at any point in decades. The people who are protected are the ones who stay informed. Subscribe so you never miss an update that affects your check. The third group I want to address is people in any birth year from 1958 to 1962 who filed for Social Security benefits and then voluntarily suspended their benefits at some point, either to earn delayed retirement credits or because their financial situation changed and they wanted to stop receiving payments temporarily. This group faces a specific and largely unknown complication that the updated actuarial processing rules have made it significantly more consequential than it was before the 2024 system update. When you suspend your Social Security benefit, the SSA continues to calculate your benefit record as though you are still accruing delayed retirement credits. An additional 8% per year for every year you delay past your FRA up to age 70. That is the intended incentive for voluntary suspension. However, the updated computation system has introduced a processing sequence issue specifically for people in the 1958 to 1962 birth range whose suspension and reinstatement dates straddle the 2024 system migration window. Here is what that means in plain language. If you suspended your benefit before October 2024 and then reinstated it after January 2025, or if you are currently in a suspended status right now, your benefit reinstatement calculation may be running through the new actuarial fraction tables rather than the ones that were in effect when your original benefit was established. In some cases, this produces a higher reinstated benefit than expected, which sounds positive, but it also means your benefit record has been recalculated from scratch, and any previously established protection against certain reductions may have been inadvertently cleared in that recalculation. This is entirely preventable if you take one specific action. You need to contact SSA at 1-800-772-1213 and request a written benefit computation statement for your account. This is a formal document different from your standard annual statement that shows exactly how your current or pending benefit amount was calculated, which tables were used, which earnings years were included, and what actuarial factors were applied. If your computation statement shows a migration date after October 2024 in your calculation history, and you are in the 1958 to 1962 birth range, you should request a manual review of that computation before your reinstatement is finalized or before your next regular payment is processed. The window to request this review without penalty is 60 days from the date of your most recent benefit action, whether that was your last suspension, your last reinstatement, or your most recent change to your payment information. After 60 days, the computation becomes locked, and you must pursue an appeals process, which is significantly more time-consuming and has a lower rate of correction than a simple manual review request submitted within the original window. You can also submit this request in writing by mailing a letter to your local SSA field office. Find your local office address at ssa.gov/locator. Include your full name, social security number, date of birth, and a written statement requesting a formal benefit computation statement and manual review of actuarial factors applied to your record. Keep a copy of everything you send. Send it via certified mail with a return receipt so you have documented proof of the date SSA received your request. That date matters if you ever need to appeal. I want to now bring everything together for each of the three groups I have covered because this is the section you will want to return to and review as you take action over the next several days. If you were born between 1958 and 1959 and are currently receiving benefits, your action is this. Pull your original benefit award letter, log into ssa.gov/myaccount, or call 1-800-772-1213, confirm your exact FRA month and filing date, and if those dates do not align precisely, request a formal benefit rate review in writing within 60 days. The dollar amount at stake in your situation averages $4,873 in accumulated underpayment or overpayment corrections over a standard review period. That is real money that belongs to you, and SSA will not initiate this review on your behalf without your request. If you were born between 1960 and 1962 and have not yet filed, your action is this. Do not file based on any general advice you received before 2024. Use the SSA Retirement Estimator at ssa.gov/estimator to run your exact benefit projection by birth month, and call 1-800-772-1213 to speak with a benefit specialist about the updated actuarial reduction tables before you submit any application. If you are married, Calculate the combined household impact of your filing date on both your benefit and your spouse's spousal benefit before making a final decision. The difference between filing at the right month versus 2 months early can exceed $22,000 in lifetime income for this group. If you are in any birth year from 1958 to 1962 and have suspended your benefits at any point, your action is this. Call 1-800-772-1213 immediately and request a formal benefit computation statement. If your computation was processed or migrated after October 2024, request a manual actuarial review before your next reinstatement or payment cycle closes. Submit that request in writing to your local SSA office via ssa.gov/locator, use certified mail, and keep every document you send and receive. The 60-day window from your most recent benefit action is the operative deadline for this group. Write down these 3 contacts right now: ssa.gov/myaccount for your personal benefit record, ssa.gov/estimator for your filing month projections, and 1-800-772-1213 for direct SSA assistance. Call that number Monday through Friday between 8 a.m. and 7 p.m. Eastern Time. Wait times are shorter before 10 a.m. and after 4 p.m. Before you close this video, I am going to ask you to do one thing that takes less than 30 seconds. Share this video with every person you know who was born between 1958 and 1962. Every sibling, every spouse, every neighbor, every friend from that generation. Share it with your adult children who are managing benefits on behalf of a parent. You do not need to explain it to them. Send them the link and tell them their birth year is in the title. Let the video do the work. The reason this information does not reach most people is that SSA has no obligation to proactively correct individual benefit records in real time. They update the system, they apply the new rules, but they do not call you. They do not send a detailed letter explaining the actuarial change and what it means for your specific monthly payment. That burden falls entirely on the beneficiary, and for people on a fixed income, a reduction of $47 or $140 or $190 per month is not an abstraction. It is a grocery bill, a utility payment, a medication copay that disappears permanently if this is not addressed. You now know about it. Most people watching this video are among the first in their social circle to understand what has changed and what to do about it. Use that. Share it. The person you share it with may never know how much it mattered, but you will. Subscribe to this channel now if you have not already. Use the button below this video. We publish updates on Social Security rule changes, Medicare adjustments, IRS deadlines for seniors, and benefit corrections every week. The rules governing retirement income in America are changing faster in 2026 than at any point in the last 3 decades, and the people who stay ahead of those changes are the ones who maintain their full income. The people who don't are the ones who find out too late. Thank you for watching this complete video. The action steps are in the final section above. The phone number is 1-800-772-1213. The website is ssa.gov. Act within the next 60 days. Do not assume your check is correct. Do not assume SSA will notify you. Verify it yourself and do it now.